Dan Hinson here with Sarasota, Florida Living, your local realtor. We have Michael Voorhees with us today from U.S. Bank. I got that right?
Yep.
So, we asked Mike to come in, and he's been on top of the market for us for quite a while. We talk weekly about what's going on. And what's kind of crazy going on right now is we all expected for rates to drop. You know, a month ago, we were talking about, oh, man, we're going to get 3 more drops this year. It's going to be great. Everybody's going to start rolling again. And then we got some news last week that that wasn't going to happen.
Right.
So I guess they found inflation was higher, and they said we're going to hold tight. And now we're looking at the highest rates we've seen since last August. I think last August we were around 7.5, and now we're kicking 7.2. We're right now coming near the end of April in 2024.
Right.
And now we're kind of flirting with that again. So everybody had these great plans of, I'm going to start making our move now,
Right.
and all these things. So before we get too much into it, welcome, Michael.
Thank you.
Appreciate you coming back in. And, we did want to kind of just keep going through the year with this so we can stay on top of it. Because everybody's, I think that's the news has just really freaked everybody out.
Yeah.
You know? So what are some of the things you might be hearing that, we might hear? I got some numerous questions here because there's a lot of things going on with the NAR settlement, and people, and some people might know. Most realtors know what's going on, but not the average person. They just, all you hear is like, "Hey, I heard I don't have to pay commission anymore in July."
Right.
Not quite the case, but we don't even have a ruling yet. So,
Yeah.
but you've been staying on top of what the lenders are how they're approaching it. So, you can give us a little quick, bio, who you are and what you do. I know we have another podcast we've done, but we're kind of getting better at this thing as we go.
Sure.
So kind of, so people know how to get a hold of you, and we'll have all your contact information again.
Okay.
But
Good.
give us a quick little, Michael, who I am and what we got going on, and then we can kind of get into the show.
Sure. So Michael Voorhees, U.S. Bank Mortgage. Been in the industry a little over 29 years. It's the only career that I've had professionally, so I feel like I've got a pretty good idea as to what comes across my desk and what to do with it. So, yeah, that's all I've done from a standpoint of my career. That's it. So, yeah, I'm still rolling.
Nice. Well, I mean, it's nice to have all that knowledge. I mean, everybody bounces around a little bit, but you just kind of stuck in it, and you've been through the ups and downs, obviously, for a while. How long you been in this now?
29 years.
Wow.
Yeah.
Amazing. So, with the headlines and everything going on, and I thank you for sending me some notes, and there's been a bunch of different things going on. And actually, the newest one you just sent me was, I actually was going to end with that. We're going to start with it because, from what you sent me in this article, it was about most people were going to originally just wait until see what rates happen before they sell. Right. But I think now life and reality are coming around to people. And, do you have some highlights in maybe that article you can share with us?
Yeah. So, if we go back to 2021, 2022, when we saw, the market was just kind of crazy and interest rates were in the mid 2s. And so a lot of people thought that they were going to stay in that house forever. I've got a 2.5% interest rate. Why would I leave? Right. And then recently I've seen some articles, and one of them that I had sent to you, that basically show that life happens for people. Right. And so, people are looking at saying, hey, we need to move. We've had another child. We've got a divorce situation, a marriage situation, whatever it might be.
Death in the family.
Yeah, exactly. Things like that. And so what was once almost untouchable, I like to say that we had a nation of squatters. Right. Because who's going to leave an interest rate that low? Sure. But ultimately now it's starting to come out that a lot of people really are looking to move. And while they don't like that interest rate, sometimes you have to do something. You have to make a move. And
right. And luckily, when some of that was happening, people were getting really good pricing, and to talk about pricing, I mean, I feel here in this Sarasota, Manatee County, and probably most of Florida, prices are staying pretty stable. Yeah. Especially because we had talked earlier how the builders have kind of control over keeping pricing because they can offer these incentives that normally your bank can't, but they're also holding their price. They're not dropping the price of the home, which is, kept it pretty solid around here too. So they might get some extra incentives with them, but that's not always maybe the best deal because they're always kind of tucked in there. They're going to get their money one way or another. So the price stays up. They're getting their money there. If they give you on the backside, maybe they raised it 10% that quarter to make sure that they can buy some more rates down and packages, is what you mentioned to me. Yep. So, and interesting enough, I have another client that's coming out of Texas in the Austin area, and I guess their market's not really doing great because it's had houses on market. Some things are holding. People are dropping prices. And, it happens in certain cities. I think it's just a matter of the location and why people want to be there. I mean, we have been fortunate in Florida as a realtor, but people still always want to live here in Florida. I mean, if you're coming to retirement and you've always planned on to do it, you might not necessarily be close as the beach as you were. You might say, I'm still coming to Florida, but I'll be 10 miles off the beach or 5 miles off the beach. And you're okay with it because you were still coming to retire, because we still have no state income tax.
Right.
We still, I think the biggest problem we have here is insurance rates.
Indeed.
And I think that's just once you kind of get a grasp of the insurance and understand, does it still work better than high taxes in New York or Chicago or whatever, or California? These are the places that I would say 60% of people from moving, those are the 3 spots are coming from for me.
Yeah.
So, with that being said, kind of a whole pattern, but now even you said that you've had more realtors reaching out, trying to introduce you to more people in this area. And actually, my partner over here in our studio and also on our team of real estate, Marius, he has sold 3 properties in the past 2 months. We have 8 people on our team, and everybody's got a little bit of listing working. We're working on 4 new listings. So things are starting to move a little bit. I think it goes back to what you said. Life is still happening because, how long can you wait for life not to happen? I'm just going to, you can't freeze life. It's still coming and going, right? So I think what's great is, you have to figure out how to help people. What's their situation? Everybody's situation is different.
Right.
And then we just address it. And if the interest rate becomes a high priority problem for them, then their plans are different than if that's not an issue.
Right.
We go forward. Right. One of the other things that most people don't know about is this whole NAR settlement. And, National Association of Realtors, I've kind of stayed away from it because until we have all the facts, it doesn't really matter,
Same
right?
with me. Yeah.
It's you see a lot of TikToks and people putting a lot of information out, and this is what the National Association of Realtors submitted to the DOJ and say this is how we see how it's been planned. They have shut that down since we've heard, so we don't know what's going to happen. I did tell most agents that we can't do anything until they tell us what it is. So we'll play within the rules they give us,
right,
and run with it, and understand that we're here to help people. And some of the things the main thing that's going to come up that we've seen, again, this is proposed, is now when you're showing houses, you're going to have to, a buyer's agent, if I'm taking somebody out to show them houses, they're going to have to sign an agreement with me.
Right.
However, we figure the commission part out. Again, we can't get into too many details because we just don't know.
Right.
Seller's still allowed to pay the buyer's agent right now.
Right.
But that's kind of where we're getting to this conversation. So how does that buyer cover some of that commission part? Because they're still trying to come up with money. And there's a new rule that came out. And if you want to kind of brief the rule from the lending side, and it's kind of similar to what was already happening. It's just now it's lined out for the new possibilities. So if you want to maybe give me I don't know if I'm asking the right question, a little blueprint how this new rule works or is going to work for the mortgage side?
Well, and excuse me, that really hasn't been worked out. And my company, I've been asking for a little while now, and they're still kind of going through all this as well. So I don't have any real good concrete information on that.
Right.
And I was asking, excuse me, I was asking this question, when this all first came out, but I can't fault the company because they want to make sure that they've got a good handle on what this is going to look like and what it's going to mean for the bank and for people that want to buy a house and use a mortgage. So I've kind of stayed a little away from that simply because I don't want to put something out there that ends up not being
true,
accurate, right? And so the company, U.S. Bank, is really looking at it, and like any lender is going to do the same thing. Right. They're going to do the due diligence. They're going to look at everything, get as much information as they can, and put that together, and then see what that looks like once everything is said and done. Right.
And I think so. It's funny. I had another agent call me because I told him I was talking to you about this, and he was like, what's that going to look like? How are they going to get the money? And I think the biggest thing I've got out of what's possibly going to happen on the mortgage side is the original way to buy a home was you list your home, the listing agent meets with the customer, and you sit down and negotiate, say it's going to be 5%, 6%, 7%, whatever it may be,
Right.
to sell your home. And as a listing agent, I would say we're going to take half of this, we're going to give it to the buyer's agent. That's the way it's always been.
Right.
So on most loans, so if they switch it where each person has to take care of their own side, one of the first things I'm going to do as a buyer's agent helping my client, because they've already agreed to pay me, is I'm going to try to get some of that money from there. I'll say, hey, we'll pay you full price,
Sure.
but can you, help me cover some of this commission for this person,
Because-
but we'll give you full price.
And they can still do that.
And they can
Right,
still do it. And I think that's what's going on in the new rule, because most loans, different type of loans, have their contribution from
Maximums.
a max that they're allowed to get from the seller.
Right.
And I think that's still going to be allowed to happen. And from what I understand in the articles and stuff you've been sending me, is that that's not going to count against the appraisal amount.
Correct.
You know, so if it's a $500,000 house and it appraised for 500, and the seller elects to give the $15,000, then
Right.
it won't hurt the appraisal, won't take it off the price or anything. So because a lot of times people are always worried, well, if I give
Yeah.
it, is it going to affect my appraisal price?
Right. Right.
And from what we know, again, just like anything else, that's what it's supposed to be.
Yeah.
So it's just, it's interesting to see how that's going to go. I mean, I know we were talking a lot the other day, but then we're all freeze again,
Right.
you know?
Well, and I can add a little bit to that as well. So Fannie and Freddie allow up to 9% seller concessions. Now, there are some caveats to that where the buyer has to have a certain down payment amount to go all the way up to that 9%.
Right.
The low end is 3, the top end is 9.
Okay.
And then VA is 4%, FHA is 6% maximums. So we still have those numbers that we're working with. And so those can still be not counted against the total amount that,
Oh, the loan.
well, that as well as it doesn't really count toward what the sellers, not the sellers, but it's not counting toward what they've got to work with as far as giving any other contributions, right?
So, for example, say that a $500,000 house at 3% is $15,000,
Right.
and there were some repairs that need to be done. So when the buyer comes in, they've had 10 days to inspect, or 15, whatever they agreed on, and we said, oh, we found some electrical wiring needs to be taken care of. It's like $3,000.
Right.
So within that 3% per se, they could say, yes, we're willing to go ahead and fix the $3,000 thing. That's
Right.
where we're going to give you a check. We're going to contribute that. But yes, we'll also pay for that. That $15,000 doesn't affect that 3%.
Correct.
It's just that it's what they're allowed to do for the fix,
Right,
Because
the
they
fix.
agreed on it, and we're still going to pay the commission out there. Now, the house would have to appraise, but it's
Shift
not
appraise,
changing
right.
it, right?
Right.
And that's somebody might elect to pay a couple thousand more to get the full commission over, and so they don't have to pay it. But again, that's depending on appraisal.
Right. Right.
So, but it's nice to know that you can get repairs done and it doesn't affect the ability to help them pay for the.
Correct.
And
Those are exclusive.
and was that always that way, or is that just?
It has been, right. When
so-
Fannie and Freddie came out recently, what they did was basically say nothing's changed, but we just want to make sure that everybody
Clarify.
knows, right, clarifying it and making sure that everybody was still the same.
And the
way.
reason they had to do that is because there's so many different takes on mortgage people, realtors, brokers calling out and going, this is the way
Right.
it's going to be, this is the way it's going to be. So no, let's clarify everything's the same.
Right.
This is what the rule is. And then when the new rule comes in from the DOJ or whoever finally decides,
Right.
our parameters are still the same unless somebody tells us otherwise.
Agreed. I don't think that they'll change that. It could happen, but who knows? And maybe it's some judge, that's going to vet this thing out and say, all right, I don't like that, and we're not going to allow that. But right now, I think it's going to stay, and I don't think Fannie and Freddie would have put that information out there if they weren't pretty darn sure. that it was going to stick around.
Yeah, they probably want to go ahead and lock that in, and then
Right.
maybe let the other rules work around what they had said. Maybe
Yeah.
who knows what comes in. So we kind of went round robin with that, and I hope it's a little clears up things. But with you working with U.S. Bank, is there some things out there? I know you have some other notes. Is there some things that people should know going into the summertime here in Florida, or what other news do you have for us that maybe we wouldn't know?
Sure. Happy to help here. So, one of the things that we talked about was a lot of people getting out of that 2% mortgage because they have to.
Right.
So that was kind of a shock for some people, but a lot of us really kind of saw that coming at some point. You
Okay.
know, you just can't stay there that
Yeah,
long.
most people are switching homes every 5 to 7 years anyway. and then life is just still allow that to happen.
Right. Now, also, you had mentioned this earlier, but as far as rate cuts, nothing is likely to happen this year on rate cuts. Initially they said there would be 3, and then they didn't do anything the initial time in March, and then it was kind of pushed back to May or maybe even July when they would do that first cut.
Right.
But I don't see how they could put 3 rate cuts into half of a year.
Right.
So what I learned here recently is that they're pretty sure there will be no rate cuts happening this year. And the estimation is that we'll probably see rates kind of in that middle to upper 6 range, and 7 range, and then maybe even approaching 8% again.
So we're more than likely to see 8 before we see below 7 again, or closer to 8 before we get down below 7 again.
Yeah, I would say that's probably a pretty good guesstimate.
Right.
Yeah. Don't know that we'll get to 8, but the mid to upper 7s is certainly
7,
possible.
7.5, 7.6, 7.7. Yeah,
in that range.
And it's amazing the buying power that takes away from people, I mean.
Well, and it's funny, just you say that. This is something else that I had in here right now as well, is that a lot of first-time home buyers are really priced out of this market.
Yes.
They can buy condos, something a little bit less, maybe 250, 300. But if you're looking at the average sales price in our area, the estimation is you need to make about $8,000 a month to be able to handle that sort of payment.
The medium home price.
Yeah, exactly. And so there's a lot of people that want to buy but can't right now, or don't think that they should because, who wants to, when you're trying to go to bed at night, you don't want to be worried about your mortgage payment.
Yeah, and it's been interesting, the effect. So I was playing in a charity golf tournament a couple weeks ago, and one of the guys I was playing with, he's a young guy, really good guy. His name's Christian. He's a personal trainer, and he has a really good business. He has a really good clientele. He personally goes to people's homes, and people are fairly affluent that are afford him to go. So he's got a good business going, and but he was like, he even brought up to me as a gentleman that's 28, 29 years old, and he goes, my money doesn't go as far. I used to go out to eat 3 times a week. I don't do that anymore. And he says, my business is good. I'm making, 100,000 plus profit a year, but I'm feeling the crunch of, if I go out and get a bite to eat, it's like $45, to have a beer and a sandwich somewhere. And so it's kind of affect everywhere. I mean, whatever your political belief is, it's just the fact that inflation is pretty crazy, and housing is always an issue. And we have a ton of rentals going up right now. I actually helped somebody find a rental, and I don't even do rentals. I helped somebody find a rental just because that's all they could do. I kind of gave them some areas of the Sarasota to look for, and which condo complexes were newer as opposed to ones that are older, and then he could decide what he wanted. So I kind of give some direction there, but I think that if we meet this, more often, and we can kind of keep our thumb on the pulse of what's going on with this. The news is throwing stuff out every day, but you really have to know the impacts. And we're still very fortunate. If you want to move down to Florida, we have a team of 8 agents. We got you to help them with loans and help figure out their plan. I've talked people out of homes too. It's like, hey, that might not be the best situation for you.
Right.
I've had 2 people that have been building homes for 2 years, and now these rates have put them out of position to be able to afford those homes now.
Right.
Because when they signed those contracts, they were in the 4s.
Yeah.
And now we're in the 8s. It's put them in a position where they, could lose their deposits on these homes. Right. And so we're working hard to help them with that. And obviously, if anybody's any questions, I can put some comments below, and we can work on that. But we're dealing with a couple people right now. They're going through it. But, you hate to see that because, everybody is doing it for their families and, to get here and enjoy this wonderful weather and be ready for hurricane season. Right. So, but, I really do appreciate you coming in. Is there any kind of last things that we should know, or is there,
one of the other things too I did want to talk about for a quick minute is insurance.
Yes.
We know how much that's going up, and taxes have been going up nationwide as well. And so those are other things that people have to worry about when they're looking to buy a house. Usually it was, what's my mortgage payment? I kind of have an idea what these other things are going to be, but with the homeowners insurance situation, that's almost untenable at this point.
Well, and you bringing that up as a lender and working with a bank like U.S. Bank, so that becomes part of the process, right? Because you have to say your insurance is going to be this, your taxes are going to be this, so it's a debt ratio income thing, right?
Right.
What's the normal I know there's percentages, right? So what's the income ratio, debt ratio, income? What's the average number for just a conventional loan or something?
Well, typically the maximum would be 50%
Right.
on a conventional conforming loan.
Okay.
But that's a scary place to be, because if taxes are a little higher, or if the insurance is higher, something else comes up and you're over that number, then there can be some problems with that.
Right, right. So if I was to purchase a $500,000 home and I'm making $100,000 a year, they're going to take my total income to figure the total nut basically to afford that home,
Right.
plus any of my other debts, if I have car payments or anything else,
Exactly.
and my debt ratio has to be under 50%.
Yeah.
My
Yes.
total check has to be less bills, under 50 grand, just to qualify. But they're really looking for lower than that, like 40% probably. Or
Well, if it's 49.9,
okay, you're good.
it's fine.
Yeah, but it's just in your
fine.
mind, you understand things are climbing.
Right.
You could get a little stretched, or you have to give some things up to keep that house, payment in line.
Yeah, I'd say this to people ever since I got in the business is, if when you lay your head down at night, if you're thinking about your mortgage payment, you bought too much house.
Makes
And
sense.
so you really need to think about, is this okay for me? Am I going to be okay with this house? Can I make that payment? Sure, you can make it, but at what cost? Is
Right.
it tight? And so those are conversations that I have with borrowers. And like you had mentioned as well, there's times when I've had a conversation with a borrower where, maybe you need to wait a little bit and, have a little bit more cushion underneath you there, so that if something comes up, you've got it,
Yeah, you're not giving the house away or getting underwater.
Right, exactly. Yeah.
So
So
okay, well, I mean, I don't have much else. My main topic was to kind of get in here and kind of see what's going on in the market now. Working with you on a weekly basis to kind of stay up to notes. I think as we meet more often, as things change, I'm hoping to see some positive change on the interest rates. We were surprised about them staying, so maybe we'll
Right.
get surprised and they'll come down.
That'd be nice.
I wouldn't bet a lottery ticket on or anything, but
no.
but I think as we move forward, we'll keep on top of it. I appreciate you coming in.
Yeah, thank you.
And
Appreciate you being here.
Well, we hope everybody enjoyed it, and we're going to leave the connection down in the bottom here for Mike Voorhees, and we're going to also put his information on the screen. So if you need to get a hold of him, talk about loans or what's going on, he's a phone call away. He'd be happy to talk to you about it. He's always picking up his phone. So until next time, you guys have a great day, wonderful week, and a wonderful year. Thank you so much.
Awesome. Yeah. Thanks. Thanks, man.
So.